Good evening, everyone, and welcome. It was, as Susie just mentioned, another record-setting day on Wall Street, with the Dow and the Dow Transports finishing at fresh all-time highs. The reason? Federal Reserve policymakers decided today to keep interest rates right where they are, near zero, for what it calls a, quote, considerable time. Now, that's the phrase some Fed watchers thought would be dropped from its post-meeting communique, and that, so the thinking went, would have opened the door to higher interest rates sooner. Well, not so fast, said Fed Chair Janet Yellen. The labor market isn't ready for higher rates just yet, and low inflation means those rates can safely stay low for now. On Wall Street, the major averages all shot higher, but closed off the highs of the session. The Dow up about 25 points to that high. NASDAQ up 9, S&P edging back from an historic intraday high this afternoon. It finished just 2 points higher on the day. Prices on 10-year treasuries fell as bond yields jumped to a session peak above 2.6%. They've moved up in the past couple of weeks. And the U.S. dollar gained a little bit of ground, too. Hampton Pearson has more.
Federal Reserve Chair Janet Yellen delivered a shot in the arm to equity markets with the message monetary policymakers still plan to keep key short-term rates at record low levels for, quote, a considerable time, a phrase that had become hotly debated in the markets. The reason, key economic measures remain subpar, including wage growth and long-term unemployment.
I want to emphasize that there is no mechanical interpretation of what the term considerable time means. And as I've said repeatedly, the decisions that the committee makes about what is the appropriate time to begin to raise its target for the federal funds rate will be data dependent.
The Fed expects slower economic growth this year and next, slightly lower unemployment, but little change on inflation. The central bank officially announced it will end its bond buying program before it expires after the next meeting in late October. Mid-2015 remains the most likely timetable for monetary policymakers to start raising rates. The size and pace of those rate hikes will depend on what's happening with the economy.
The federal funds rate will serve as the key rate to communicate the stance of policy. To begin normalization, the committee will raise its target range for the federal funds rate. The committee expects that the effective federal funds rate may vary within the target range and could even move outside of that range on occasion.
As far as the timetable for shrinking the Fed's $4 trillion balance sheet, Fed Chair Yellen says that could take until the end of the decade. For Nightly Business Report, I'm Hampton Pearson in Washington.
Josh Feynman joins us now to talk more about all of this. He's chief economist at Deutsche Asset and Wealth Management. Josh, it just seems like the message from the Fed today was that it's in no hurry to change what's going on with rates. Are policymakers doing the right thing from your point of view?
I think so. I mean, I think they've been singing, from the same hymn book for a while. It's that they're not rushing for the exits, and I think that's appropriate, given that while the economy is making progress, we're better off than we were a few years ago, and I think that progress is likely to continue. We're not where we want to be or need to be. Inflation is still running below target, and we're still shy of full employment. The Fed says, they still see considerable slack in the labor market. I agree. So I just don't see there's any great sense of urgency to start moving quickly or aggressively.
Does the Fed's transparency make it easier or harder for investors?
I think it makes it easier in the sense that, the Fed is pretty clear about what they're trying to achieve. They're trying to get the economy back to full employment and back to price stability. So it's good to know that. Those are sort of the guideposts. And they've told us, they're not going to move until they're much more confident that we're going to get there. So I think that does help people navigate. It doesn't mean that we know for sure what the Fed's going to do because, as they say, it's conditional, right? It depends on how the economy is going to evolve. Nobody knows for sure what that's going to be, but I think it's helpful to have these guideposts.
I know you're an economist, and here Tyler and I are asking you stock market questions, but they're so connected that investors are really looking to see what's going on in the economy and vice versa. So stocks rose a little bit today. Gold was stronger. The dollar was gold was down. The dollar was stronger. So kind of what's next for the markets? Is it just going to be are they going to go higher from here? Are they going to be going lower, just sort of stuck in this same range? What do you think happens based on what Janet Yellen said today?
I think, based on what she said and what we've been talking about along, it depends. It really depends on how the economy evolves. I think the economy's got a good chance of continuing along its recovery path and actually doing a little bit better. I think the progress that we've been seeing towards full employment, towards price stability is likely to continue. But I think it's going to be gradual. I think that the Fed is certainly not going to be hurrying. They're going to keep policy accommodative still for quite a while. So I think on the whole that creates a pretty favorable backdrop for equity markets. But of course there are risks out there. There are global risks, to be sure. Though the data have looked a little bit better in the U.S., they look a little bit soggier in other parts of the world. So we have to keep an eye on that.
There were two dissenters today, two dissenters who will be leaving the voting rolls on the Open Market Committee next year. Has Janet Yellen proved that she is in charge of the Fed fully?
I think so. I mean, of course, it is a consensus-building institution, and you're never going to get everybody on the same page. People have different views of the way the world works. I think these dissenters, though, are kind of far from the center of gravity of the decision-making core of the Fed. So I don't think they really are reflective of where that core is. And I think Chair Yellen has done a pretty good job of guiding and leading that center of gravity.
Josh, always interesting to talk to you and hear what you have to say. Thank you
Great
so
to be
much.
here.
Josh Feinman from Deutsche Asset and Wealth Management. Tyler?